everyone. My name is Rashi Aditi Ghosh, and I'm the assistant editor of a magazine called the Banking and Finance Post. It's a bi-monthly magazine published by Elets Technomedia, which is India's biggest B2B media platform. And I welcome to the brand new episode of Elets Innovation Talk. Um, Albert Einstein once said that you can't solve a problem on the same level that it was created, and you have to rise above to it, the next level. That means that innovation is something that we should always look up to. We should always innovate to do better in life. And through Let's Innovation Talk, we try to highlight the measures taken by leaders from across industries and across the globe. And during these uncertain times when we all are going through the challenges of COVID, this kind of innovation talk is actually proving to be very fruitful and motivating for all of us because leaders are narrating their stories, their success stories, and initiatives. So today we have with us at Let's Innovation Talk Dr. Jaya Vaidhyanathan, and she is the CEO of BCT Digital Division of Bhavan Cybertech, a global technology company specializing in digital transformation, predictive analytics, and IoT. Dr. Jaya has over 20 years of experience in building businesses grounds up and scaling to $1 billion business opportunities. She's a well known face across the BFSI industry for her leadership skills and a very good orator because we have been associated with her in the past as well. Welcome, Dr. Jaya. Welcome to Elets Innovation Talk.
Thank you. Pleasure to be here, Rashi.
Thank you. So, Dr. Jaya, to begin with, my first question to you today is: we all know about COVID. Industries around the globe they are still struggling with the challenges of the first and second wave of COVID, and there are speculations pertaining to the third wave that it is going to hit us really soon. So, how do you think the third wave of COVID will contribute towards the level of non-performing assets of financial institutions?
Like most things in life, you hope for the best but prepare for the worst. And we are no different, right? While hoping there's no serious third wave coming at us, it looks like the worst is behind us in terms of NPAs because of a few reasons. One, banks have already provisioned enough for legacy bad loans. And two, they've also raised capital from the buoyant capital markets in the last 1 year. And so they're well capitalized for now. And we can also say that the increasing vaccination rates means, probably less disruption in terms of the third wave. So I think that's a good thing. But there is also the positive, all of that I cited were positive notes. There is a fear that loans given out during the pandemic could be prone to misuse. For example, in the US, if you look at the PPP loans that were given, were invested in turn in Bitcoins. And so risk may not have been adequately captured. So these are some of the other side of the story that you also need to be wary of.
Thank you, Dr. Jaya, for the inputs. And what according to you, because this is something which is related to the first question I asked you, what according to you will be the trajectory of NPS during Q1 of financial year 2022 after and for the remaining financial year?
Right. The RBI's latest stress forecasts, gross non-performing assets of scheduled commercial bank will rise from 7.5% in March to 9.8 as a base scenario with 11.2% as the extreme scenario. That's what has been forecast. I mean, that's some data for you. While this situation looks alarming, RBI governor is also saying the situation is much better than it was 6 months back. So you can just imagine, it's more like finding some small pleasures in rapid raise of NPA issue. So also provision coverage ratios have increased substantially, and you only can expect minimal asset quality slippages. So I think it's not too bad. It's still rising tremendously. But the good news is that some of the provisions have been made.
Thank you for the facts and figures, Dr. Jaya. NPA is something that is bothering us for years now, and
Yeah.
I think COVID has accelerated it, and there are issues, there are challenges that the sector is trying to overcome.
Yeah.
So, we all know we have been organizing a lot of conferences and we talk to a lot of experts. They all are saying that there are challenges of COVID, but there's an opportunity in disguise, which is pertaining to the digital transformation or digital initiatives that organizations are taking after COVID. And some are also some are also saying that the level has been accelerated by 5 years. That level of achievement they have received. So we have seen that sectors are onboarding digital models to overcome
Mhm.
the bottlenecks. So what do you think? What are the sectors that are going to revive faster, and what are the sectors that are still going to take time to get out this bottleneck or challenges?
I can give you a simplistic answer, which a lot of people have been talking about, but there's far more under the hood than the simplistic answer. Simplistic answer would be something like IT companies will do well, manufacturing will take time to improve, supply chain disruptions, so that's going to take a long time to revive. However, a closer examination indicates a paradigm shift in business across sectors. Just to give you an example, just last week, a completely untested and never before seen product saw 1 million bookings in a couple of days. It's a world record. And you know what I'm referring to? It's the Ola e bike from the automobile industry. So if you were generically to say automobile industry is going to be slow to start, it's the automobile industry may be slow to start, but there is a lot of innovation happening with the digital means to kind of revive the industry. So it just means that different sectors will use technology and become more nimbler and more competitive. And services already tried and tested during the pandemic will kind of be in the limelight. And if you look at manufacturing, again, there are going to be sea changes in process and supply chain optimization, in the JIT process. So you will find a lot of different things. Let's take a sector like agriculture, right? You would probably say agriculture has nothing to do with digital revolution for now, but you're finding that there's a lot of real-time price discovery, e-bidding opening up, both in the domestic and global markets. So you're finding a lot of innovation in traditional sector, and therefore it's not going to be the traditional sector that revives. It's going to be a very brand new sector, which kind of spins off on its axis in terms of innovation. So you could say the short answer to the question is those sectors that continue to innovate remain relevant, and those sectors that don't. So it's as simple as that.
Yeah, so goes back to the old saying by Albert Einstein that if you don't innovate, you don't survive. Thank you.
Yeah.
During the pandemic, we were talking about the financial sectors, and, and the challenges, and it has. I have read in media reports that it has muted bank credit growth and all that. So I would like to know your point of view that experts are suggesting that they're talking about muted growth in retail credit also. So, what is your take on the same, and what do you expect expect the demand to go up, to the pre-COVID levels across the industry? How much time will it take? What do you think? Will it go back to that pre-COVID period? Will we be able to get into that shape or that phase once again?
Again, I'll probably state the obvious answer, which is muted growth in retail credit is a reality because people are postponing purchases and saving aggressively either due to loss of income or they think it's prudent to wait and watch. So that is something because of the pandemic, the third wave, is it going to be there or not? Will I have jobs? So spending is really muted. There's no way around it, right? And from a bank's perspective, that's a problem. And therefore, it's prudent to wait and watch rather than chase borrowers with suboptimal credit profiles. That is something that banks really have to be vigilant and patient. And demand is certainly expected to go to pre COVID levels even before normal economic activity happens, provided you don't have more lockdowns, etc., which again is a unknown variable, which is what we call as an outlier event, right? So growth will come from a variety of consumer segments. For instance, people that shared rice before are not going to, which means you probably will have demand for vehicles because you focus on secure safety and social distancing. And then you have consumer durables like air conditioners. People are more at home. So you would have direct work from home demand, you'll have work furniture, gadgets, etc. So demand is picking up in pockets. It again goes back to the earlier question you asked, which is more about traditional sectors kind of spinning on the axis and creating new things and figuring out what people need post pandemic in terms of recovery. And there are trends around the world that you can watch out for.
Right, true. So there is, I can even, you're right that we can see growth in pockets. There are things that we need more now than before. So the growth is there, but we see new sectors booming, and, that's something which is good, and we should always be positive about whichever growth or whatever growth we are getting. So, Dr. Jaya, government of India has been doing. Is taking a lot of initiatives and measures to support the financial sector. In particular, if you talk about a privatization of banks, and if you talk about NBFCs, they are this TLTR1, TLTR2. They're trying to arrange fund connecting NBFCs to banks, and so what are your views in this regard? What are your views on pertaining to the measures taken by government of India towards financial institutions?
I think it started much before the pandemic hit because it started with the ambit of RBI covering NBFCs. NBFCs are getting larger and, almost crossing the border between what an NBFC does and what a bank does. So I think, therefore, the same rules need to apply because if you're lending and if you have those norms, you're borderline becoming a bank, then you need to still be under the ambit of what it does. So NBFCs again have tried to innovate with respect to regulation. As in they've said, let us not each of us do the same thing. Let's kind of look at an account aggregator kind of a model and then look at how do we use something like a shared service for a lot of things. So I think it's been an innovation from the perspective of NBFCs. But I think from an RBI perspective, they've said if you are doing what a bank does, then the same regulation applies to you. So I don't think it was something that was an afterthought. I think it started with the regulation much before the pandemic hit.
Yes, it
And
did.
NBFCs have their own challenges, right? When there is lack of credit and you're looking at a largely MSME segment, which is largely affected, then the business expansion is again severely affected.
Right, right. It started much before
Yeah,
the pandemic, and yeah, they are. The government is innovating. The industries are innovating. Everybody is trying to connect so that they can find out the challenges, and the support is rendered in the area that is required. So,
right.
talking about growth and being hopeful, there is one interesting fact which is coming up. We all are seeing that fintechs are they are really coming up with very good solutions. There are the technology solution providers. They are coming up with good solutions, trying to help financial institutions to innovate. There was a gap, where the institutions were not able to reach. I think fintechs being, or the technology solution providers, are trying to bridge that gap. They are trying to help financial institutions, and a lot of innovations are coming up because of that. So what is your view on this collaboration? Do you think that they are helping financial institutions, in particularly banks? And do you think banks are still conservative, or they're gradually opening up to this collaboration, which is going to help them mutually?
I think it goes back to the fundamental principles of do what you know best. And banks have their own core competencies in terms of what they do, which is their core business. And banks' core business is not technology, but it's more a question of, it was never, fintechs were never a competitor to banks. They were always somebody who was a service provider or a collaborator. So it comes back to the principle of do what you know best. And fintechs, obviously, given what they do and their core business being the intersection of finance and technology, innovate with respect to technology. So why would a bank want to be a technology provider? They don't, and I don't think being conservative is any more an option, right? So it's more in terms of how you leverage the best of breed to make the bank, function in the best manner as possible. Let me explain with maybe an example which all of us have been, are quite familiar with. HDFC Bank did its fundamental business very well. They had aggressive growth in revenues. They were onboarding customers. The business was better than it was ever before. But what failed them was the technology, which was more the ability to onboard new channels because the investment in the back end and the investment in the mid office was not commensurate with the growth. So,
Yes.
partnership with fintechs and bringing the best of breed of who knows what's the best, and technology obsolescence is very, very high. So, and the law where, every time technology kind of obsolescence is shortening up. So, looking at what is the innovation happening around the globe, bringing best practices into the bank, and looking at latest techniques to kind of look at solving business problems is something fintechs do very well, and that's their core competency. So let everybody be in a happy ecosystem where they do what's best known to them, and that is, being smart, and it's not about being conservative.
Yes.
Example,
Wonderfully.
I would also give that Indian banks, for instance, were very slow in cloud adoption and always investing in on-prem software solution. The pandemic, which is pains like lockdown, etc., has also brought in new innovation in that sphere. Right now, they can no longer say that I will never look at cloud. Right, so they're also looking at availability of secure infrastructure and standards and moving more and more towards the cloud. For instance, Axis Bank recently announced a tech partnership to move two-thirds of its IT applications on a cloud, which is probably the first by any bank in India. So there's a
Yes.
lot of collaboration happening, and that's a very healthy trend.
Right. So yeah, but you're right that cloud is something which is not new, but it is taking time to open up, especially in India amongst the public sector banks that are still little conservative about it. But I think they are leveling up. They're growing because the requirement is like that, and fintechs are coming up with such attractive things that they are considering it, and there are banks that they are who have collaborated and they're planning to collaborate further with fintechs. Because it's a mutual growth thing, as you put down together very
Yeah.
wonderfully. So you were talking about HDFC Bank. Take this further. We have seen that RBI recently restricted Mastercard from acquiring new customers effectively from June 22 on the grounds of non-compliance with the direction of storage of payment
Yeah.
system data. Yeah. So, what do you think are the implications and expectations from financial ecosystem in terms of innovations to cope up the situation? This is, a topic which is in discussions for a long time. Storage data. WhatsApp was struggling for a long time to launch their payment system. So, what is your view in this regard?
I think it's something that's a worldwide phenomena where people are saying store data locally. The application can be a global application, but data needs to be resident locally. And it's just not India. There's a lot, worldwide, there's a lot of momentum towards storing data locally. And if you ask Mastermind would say, I'm rushing to comply with local storage requirement, and we will be back soon in business. That's what they say. Now, if you look at where I think some of the failings is more towards the ecosystem. I would not even talk about cloud storage because everybody knows that they needed to store data locally. They didn't, time was running out, and therefore the guideline. So, if you ask about where I see a major failing, is more towards partnerships. If you had, there were a few banks where their entire majority of the cards on Mastercard, and they are going to wait until the integration with the new network. happens, and that's going to take a few months. And also, these banks will have a problem with liability account acquisition, because debit card issuance is also affected.
Right.
So you need, what is missing is that banks need to always have diversification. You need to have multiple partnerships so that you're not caught in a conundrum where you're saying, I'm going down because my partners fail me, right? So non-compliance with policies and regulation by partners are affecting the underlying banks and institutions. So I think that is more towards a process. It's more towards diversification of partnerships and also having either or kind of a situation. Obviously, from Mastercard perspective, it's more about timeliness in terms of what you do. How do you kind of get that on board before the compliance deadline? And I'm actually, in some ways, RBI is kind of like getting aggressive with respect to saying you comply or you're out, right? So I
Right.
think that's more a stance that it was almost like a case in point.
Yeah. Uh, Thank you so much for your inputs and the question. This is something of major importance, and everybody is talking about it for a long time. You're right to say that RBI's stance is clear, loud and clear now to for everybody to work accordingly. So my last question to you today, was would be about your organization. You've been known for taking a lot of initiatives. I was reading your bio, such a long, description on how you have done things. I think it was still short because I have been reading about you. I know you take a lot of initiatives and you do a lot of CSR activities as well. So, what do you think? How are you planning the remaining 2021 when we talk about innovation from that perspective? What would you like to add?
So as you know, that we've always been focused on white spaces. We've been focused on adjacencies in the market, wherein we aid banks in doing their job better, which has always been our mantra. Um, Most of our the players in the risk area kind of have black boxes. They say, "Give it to me. We'll churn out the data and give it back to you in a format that you consume." And then there's no transparency in the process. Our objective first, in terms of innovation, is to bring that transparency into what happens with the risk product. And
Right.
second is to also have a business first technology agnostic approach, which is more to say, here's your problem and here's the solution. We're not going to give you a generic analytics platform and say, build your tool on it, which has been a unique way of looking at the market globally and kind of saying every problem needs a solution. We're not going to add more problems to your suite of existing problems to figure out what the answer is. So
Absolutely.
that's been the focus. And there are a lot of white spaces where banks have to be, or financial institutions have to be running on their feet to figure out a solution. And that's a gap we bridge. And in terms of innovation, it's more about, people talk about tools as an innovation. I kind of say they're tools. I mean, obviously, we use a lot of artificial intelligence, we use predictive analytics. So we use a lot of that spectrum to make our, that's a core or tools to solve a business problem. So you may ask, how do they aid us? Why don't you say, I have an AI technology tool? But that's not who we are. We are in the business of solving problems for financial institutions. And by the way, we use these tools to make that. How do they help? For instance, it goes beyond. AI is not about replacing human jobs. AI is more about the realm of going beyond what a human mind can comprehend. Let's say, Rashi, you're given 3,000 data points. What are you going to be doing? You're going to be saying, I really am confused, right? If it's
Right.
five, it makes sense. If it's 3,000, it doesn't make sense. But more and more, you see that there are so many channels of information, and you can't say, I don't need anything beyond five, because the rest of the 2995 points may be the ones that are core to your business.
Right.
So AI goes into the realm of what a human mind cannot comprehend, draws patterns out of these data inputs, and helps you make an intelligent decision. And that's why we call it a tool. It's not a solution by itself, but it's something that enables you to make that decision better.
Right. Yeah, wonderfully put together. Dr. Jaya, you've been associated with us, so, I would like to know what is your point of view towards, such innovation talks. Do you think they are important, and how fruitful these talks would be for the sector specifically you're working in? How important do you think it is? This is
I
something which
think
is very personal.
I think it's a great channel in terms of talking about innovation, because I think when you talk about things, it promotes a lot more people to follow suit. And
Right.
I think in terms of Make in India, it's been innovation has been the core of it. It's more about how do you kind of take India from a services mindset to a product mindset. And we want the big unicorns more and more to come out of India. And that can come only from core innovation. It's not going to come from subsidiary innovation. So I think channels that talk about innovation is something that I've always said I'm game, because that once you understand what is at the core of innovation, everybody else wants to do more. And I'm sure there are people that are watching who are on the cross section of deciding, is it too risky? Should I make a step in the right direction? Am I on the right path? And this should be, I mean, the kind of talk shows like this should, encourage more and more entrepreneurs to come out there and then innovate more products. And that's when India will truly come of age.
Right, that is what we are aiming at. We want the experts to tell us, to tell everybody, so that the motivation level is up. People should know that, everybody is working towards a goal, and we will overcome this soon. So, this is it. We ended up here, and with the hope that we would come again with someone this motivating, with someone this cheered up, working towards a better tomorrow for everybody. And thank you so much for watching us today. Thanks a lot, Dr. Jaya. Thank you, everybody. Thanks a lot.
Thank you. Thank you.